That's it, guys. We are nearing the end of Bitcoin's traditional 4-year cycle, and that usually means one thing, that we should brace for one final blow off top, followed by a brutal market crash. However, not everyone agrees with that outlook.
There's been an enormous amount of selling of Bitcoin this year, particularly by older coins. I think the bull market is structurally intact, but it's at risk. Bitcoin's kind of at a pivot point here.
So what if Bitcoin has already topped? And how severe could the next bear market be when it comes? To answer these questions, we sat down with Alex Thorn, head of research at Galaxy Digital. Before we get started, as always, this video should not be considered financial advice. It's just our guest assessment of the Bitcoin market. Let's get into it. So first question would be a prediction that you made in December 2024. You said that Bitcoin had the potential to reach $185,000 by the end of 2025. Do you still think that's possible?
I think it's probably unlikely. I think something in the range of 130 to maybe 150 on a bull case upside would be more likely at this point, with only 2.5 months left until the end of the year. Bitcoin's kind of at a pivot point here, where as we record, it's about $109,000, but it sort of below 107 starts to raise fears of sub 100, and maybe below 118 says new all-time highs are back in play, and really quite an indecisive space right here in like the 109 range. Something has to be decided, but I think 185 is too optimistic for the end of the year at this point.
When we saw this big crash on the 10th of October, which was the biggest liquidation event in crypto history, you came out with a post when you were saying that, it was a massive liquidation event, but the fundamental structure of the bull market was intact. On the other hand, now you are saying that Bitcoin is at a pivotal moment. How can these two statements coincide?
I think the bull market is structurally intact, but it's at risk. I think at these levels, I think, if you look at things like short-term holder cost basis or the realized cap of Bitcoin, something like, my friend James Check has pointed this out, something like 60+% of all the money ever invested in Bitcoin was now done so over the price of 95,000. So what I'm really saying is any material further decline starts to that would put more than half the network underwater in terms of ownership if it were to get down to 95K, just 95K. It's actually a very bullish statement. People have bought a lot of Bitcoin at this levels and higher, and people like that price over 100K. If you were to lose 100K now, I think it would create a lot of anxiety that could put that structural bull market in jeopardy. I think also a lot of the point in my post about, following October 10th was also about the anxiety in the markets about, particularly the equity markets, about AI CapEx spend and whether this giant amount of money that hyperscalers and Mag 7 companies are putting into building out data centers and energy projects to service AI, how long can that continue? And is it like the pre-.com period that led ultimately to that bubble? I argued that it's not. It is in some ways, but that actually the government interest, both from the US government and governments around the world in AI, looks a lot more like a space race or a Manhattan project than sort of the education-driven rollout of the internet in the 90s. And actually governments are spending significantly more money on AI, subsidies, grants, incentives, etc., than they did on the internet then, both relative to national budgets and to GDP. So that's an important part of this story, because the AI equity trade is driving risk markets generally and sort of has the risk appetite of risk investors right there in its grasp. And so, any kind of feeling that AI is topped or is a bubble could negatively affect all markets. And I do think, nothing about Bitcoin's drop, whether on October 10th or anytime recently, has been fundamental about Bitcoin. It's really trading like a macro asset, and it is very susceptible to things like anxiety in equity markets. And I think that's what's driving it. If it does, drop below 100K, it won't be because of anxiety about Bitcoin. It'll be because of macro factors.
I wanted to touch upon what you said regarding what James Check said. He sees like a base that is absorbing this massive selling that we have been seeing in the last few days. So according to him, that's a bullish sign. That do you see the same thing happening?
Yeah, I mean, there's been an enormous amount of selling of Bitcoin this year, particularly by older coins, an enormous amount, which is normal and healthy, right? But the other side of the coin there, so to speak, is that for every sale there's a buyer, and an enormous amount of Bitcoin has been bought at these higher prices, which is absolutely bullish. It is the sort of institutionalization and the normalization of Bitcoin at these levels, right? People want Bitcoin at 109K. They've been buying it there. That's great. And so for all of that whale selling, it's being bought by someone. And the fact that, say like an OG can sell 80,000 Bitcoin and the Bitcoin's liquid enough to support a $10 billion sale is incredibly bullish. And it's totally right about the Bitcoin markets. And there are a lot of reasons who's buying those coins, right? It's the ETFs, it's advisors, it's institutions. We're sort of entering this post 100K era where you're not quite early. The days of a cypherpunk mining Bitcoin and making 10, 100, 1000x on Bitcoin are probably over. Instead, now you have this staircase, the growing passive bid for Bitcoin. Morgan Stanley, one of the largest wirehouses in the world, just announced that they're allowing their registered investment advisors, of whom they have like 10,000, to recommend in client portfolios, a Bitcoin allocation up to 4%. That's incredibly bullish. This is probably what the new character of Bitcoin ownership is going to look like, right? It's going to be more institutional, more passive, possibly more custodial. There's a lot of demand for Bitcoin at these levels, and Bitcoin doesn't stay ambivalent for very long typically. So it's more, when I say it's a pivot point, it's more like typically some decision in Bitcoin price is going to occur one way or another when it's sort of in these ranges for so long, right? And so that's what I'm anticipating. I think I'm bullish bias here. I think it's likely to go up again and test all-time highs again this year. But again, if we see, say, like, new big negative tariff headlines, that could impact it. Anything, in equity market, material squishiness in equity markets could impact it to the downside, right? It is now in global institutional portfolios, and those portfolios trade on macro.
And the macro with Donald Trump leading the United States is more chaotic than it used to. I think from what you have been saying, it seems that I kind of know the answer already. But I wanted to ask you this question: do you still believe that the 4-year cycle is in place?
I don't believe that. I think if you just look at Bitcoin price, right? Like 2017, huge blow off top, huge trough in 2018. 2021, huge blow off tops, huge drawdowns. But now if you look at the price since November 2022, it's pretty much just a slow grind staircase higher. Sure, there's volatility in the middle, but I challenge people to actually interrogate the price chart. It doesn't look anything like those prior cycles. It literally looks different. I think, whether the 4-year cycle had been driven by the Bitcoin halving events or by global liquidity, or the business cycle, it's not clear. I think it definitely in later cycles and going forward will not be materially impacted by the halving, which is so small a reduction now relative to Bitcoin's float that it's can't be that impactful from a pure supply side dynamic. But also it just feels different. It feels like, this is sort of what I'm saying about the sort of pre-100K era and post-100K era. You're not really quite early to an asset when Morgan Stanley starts recommending a 4% allocation to it in all its client portfolios, okay? Like, this is now a mature asset, and it's going to trade differently than sort of an early stage growth asset.
You think that this blow off top that we saw in past bull markets won't happen? And I also believe so because, as you said, the trend seems to be much more gradual. So what I think is that if we're going to see a bear market in a couple of months, it's also going to be far less severe and more mild. Would you agree?
Yeah, I think that's right. I mean, I think, even a drop to 95K would be 25% from all-time high. I mean, that's mild by Bitcoin comparisons, right? Like, which prior Bitcoin markets and cycles have been characterized by 70, 80, 90% drawdowns, right? I just don't think that's really in the cards here at all. But yes, it's sort of, you create the bear market that you deserve from the bull market. When you take gold, for example, gold came down, almost 10 plus percent from its, peak earlier this week. People are saying it's the biggest drop since 2013. Well, yeah, it went vertical though, right? So if Bitcoin's not going to go vertical and have a crazy 2017 style blow off top, it's probably also not going to drop it, 90%. Like those drops came because of really massive short-term moves higher, right? And instead, when you're grinding and you're establishing the realized cap is over $1 trillion now for Bitcoin, like an enormous amount of money, like I said, Bitcoin has been bought at scale above 100K, right? Like that is a sign that the world is agreeing that the fair price for a Bitcoin is at that level, right? Or near that level. It's not like in 2017, the price was like $8,000 and 3 days later it was 20, right? Like there was no time to establish and normalize Bitcoin trading at 15K to then provide support when it then came down, right? So we're building a stronger base characterized by lower realized volatility, more institutional ownership, right? And slower passive accumulation. I think that's positive.
Thanks, Alex. That was a great conversation. And let's see how it goes. It will be interesting to see next year how this will play out. And I hope to see you soon again on our show.
All right. Thank you, Giovanni. Appreciate it.